Hi everyone, it's Ozan here. I'm joined today in lovely Cambridgeshire by Fiona Talbot. Fiona, welcome.
Hi.
Thank you very much for making the time. I was about to say Fiona Talbot, property investor and entrepreneur, but we've just got into a bit of a discussion about the word entrepreneur, so maybe we better deal with that first. So, what school are you in? Because there's two schools of thought on entrepreneur. Either entrepreneur is something that people call you and you don't call yourself it, or you just recognise the fact that you're an entrepreneur. What do you think?
I don't know, because I see an entrepreneur, the definition I use is somebody that mobilises resources, people, money, etc., tools and systems in the pursuit of their vision. And essentially that's what I'm doing. I have my vision and I'm mobilising my resources to make that happen. But I don't tend to call myself an entrepreneur. I think I agree with you that it's what other people might call you. And I have the debate often with my husband about an entrepreneur versus a business person. But to me, a business person is more established. They might have started out as an entrepreneur, but as the vision's been implemented, they've moved across to then being a business person, running their business on a day-to-day basis.
Yeah, I guess it's what you're comfortable with, but I think both you and I don't refer to ourselves as entrepreneurs. Hopefully one day somebody will call me an entrepreneur, but I'd probably call you one.
Yeah.
So Fiona, you've been in property for, is it around 20 years now?
It's 20 years in June this year.
Wow.
I know.
So
it's scary, really.
You've been through recessions, you've been through ups and downs,
Yep.
and you've scaled your property portfolio into now what is a proper property business. It's an 8-figure property company, isn't
Yeah.
it? So you've kind of done really, really well, and that's why I wanted to sort of have a chat with you today. Can we just, before we dive into your property portfolio, can we just rewind to your life before property? Because there must have been life.
Is there a life before property?
I think there probably is. So what did you do before you got into property?
Well, so once upon a time, I was born and raised in Australia, Melbourne, Australia, in the big city. And I went to Melbourne University, which is equivalent of sort of Oxford, Cambridge University. And I came to the UK sort of 20 years ago. And my parents were landlords. So I was sort of rather like yourself, to be honest. I'm second generation, I guess. And I spent a lot of time when I was younger being taken to rental properties when tenants moved out. Yeah. My dad ran the sort of freehold of a block of flats, and we used to clean on the weekends and stuff like that. Yeah. Cheap labour force, used to pay us in Mars bars. So I always had that kind of wandering property eye. And but I went and got more of a corporate job. I was working at NTL in the business analysis team. But I'd always wanted to go forth in property somehow. I read a lot of books, mainly American, because there wasn't very many UK books back then. Robert Shemin and Russ Whitney and things like that. So I saved up a sort of small sum, took the leap, left my job without, the net disappeared. And I think back then my plan was to buy in Birmingham terraced houses for 20,000, work on them, sell them for 22 to 24,000. That was kind of my working plan at the time. I went on a course, learnt about leverage and compounding,
wow,
which was just brilliant. And I reshuffled my whole plan, decided I didn't want to sell. So I've always been a long-term asset builder. And so basically short stint in the corporate world. But I think I was always somebody that was destined to work for themselves, really. 20 years on, that's what I'm doing.
And in terms of your current property portfolio and your business, what are your current interests? What are you sort of keen on or not keen on? We talk about property strategies. I know that not everyone uses that terminology, but what are you into sort of property-wise?
Well, so when I first started out, I was following a certain strategy, which was a lot of new build, so buying at discount, end of sites or builders year ends and things like that. So buying at a discount, but always having the capacity to refinance and take sort of capital back out for growth. And then over the years, obviously your strategies change. I now am more interested in commercial investments. I started buying commercial 7 or 8 years ago on the side. So, I had grown a predominantly residential portfolio. Then I started by buying a hotel. Well, actually, I bought an office building first. Second purchase was a hotel and a sports bar and so on. Now, I think I'd steered away from commercial initially because obviously harder to finance, more equity down, less ability to recycle out, and more growth for future purchases. but I picked up some commercial along the way, and now I've started to realise that I enjoy commercial investment more because, you know, in one sort of good commercial deal, I can do the equivalent of 5 to 8 residential deals. Like the FRI, full repairing, maintaining leases, the ability to create equity by structuring the lease the right way or putting the right tenant in or whatever too. So I'm doing more commercial investment deals, to be honest.
That's quite interesting because at the moment the flavour of the month is kind of commercial to resi conversion.
Yeah.
And it's not that you're not doing that, because I understand you're doing that as
Yeah.
well. You've got a couple of projects on the go, but kind of, you wouldn't call it commercial to commercial, but maybe commercial change of use or buying the business with the asset.
Well, so I've done that as well. Yeah. So I picked up these commercial buildings that had trading businesses that came with the building, and then I kind of got distracted by running these businesses and growing these businesses, that entrepreneurship shiny penny thing that we all suffer from. But I've actually started to exit that type of thing to operators, because I've really realigned myself to my plan, and that is just to be, you know, scaling a property company. And so I call it commercial other. Commercial other. Yeah.
Non-conversion.
So I'm sure there'll be some. I've been in HMO since 2009. I have about 100 HMO rooms as a minor strategy. And when I used to do that, I called it...
Sorry, I'll just stop you there. 100 HMO rooms as a minor strategy.
Yes.
Wow. I think that just shows you what level we're playing at today. Got a strong HMO game going on there, Fiona.
And that I used to call rent a room. So I'm sure they'll come up with a better name than commercial other, but or commercial, not, you know, commercial investment. I wasn't a developer, and I didn't really want to do conversion to, you know, commercial conversion to resi, but I've got 2 projects on the go, GDV, probably just over $1 million in the area, and I call myself a reluctant developer, but in both cases I'll keep the stock, and it just grows my portfolio, and the yields are really, really good. One of them, we're in a discussion with a housing association to take it for 5 years, you know, to provide accommodation for local people, low-income local people, which I'm really keen on.
That's really good.
So,
but you kind of resisted the urge from... when we've been speaking, I should just say, we've been recording for a few minutes, but we've been speaking for absolutely ages. We can pretty much put the world to right.
You know what happens with property people get together, they just talk.
We should have recorded our earlier conversations, but I'm not sure it was kind of broadcastable, if that's a word. But Fiona, you've basically resisted the urge to kind of say buy to let, you know, commercial building going up, and then kind of 150 flats. You've kind of resisted doing that, and kind of it's what everybody else is doing. So why haven't you done these sort of huge commercial conversions that everybody else is doing?
I think the thing is, I've always grown organically through my own endeavours. Haven't got a business partner, which has not always been the best thing. I haven't had that shoulder to cry on when things go wrong. Not that I'm a crier. If people that know me know that I don't. But I haven't had a business partner. I haven't really either worked with joint venture partners. And I think to do very large scale developments, obviously that would break one of my sort of rules around that, where I tend to just... I've always said to myself, I'd rather have less, but be in control of it myself. You know, so I haven't really done that. And I think it was also slightly out of my skill set, because, you know, you've got to have such a broad range of skills in property, don't you, really? And my skills are really deal analysis. Show me any deal, I can tell you where the money's to be made, you know, or not made, as the case may be. And, you know, optimization, so taking things and making them work better, increasing your cash flow, or opening up other channels of income. Contracts, you know, I'm very, I know you're a former lawyer, like I will read the contracts and find out where the errors are and what needs to be, how it needs to be structured so that, you know, the risks are reduced or eliminated and things like that. So that's where I sit. What colour to paint the wall, what kind of sinks to put in, you know, dealing with the main contractor, not so much my skill set. So I've focused on being a real deal maker.
Yeah.
And just knowing, and also understanding how to financially structure it and things like that. That's where my skills are. My skills haven't been in the development side.
Something I've picked up on in what you've just said, but also our earlier conversations, is that you're very involved in the due diligence and the legal procedure, the drafting of commercial leases. And I think that this is a really important point, because a lot of people will say, get a solicitor, get a good one, and let them do it. But a lot of the things you're talking about here are deal specific, and the lawyer will just do what the lawyer thinks is best for you, but you will do what is commercially savvy.
Well, also, I have to say that every single commercial contract that has crossed my desk has had errors in it.
Really? Wow.
And yeah, I've had situations where I'm paying, say, $4,000 for it to be prepared, and I've found 2 or 3 big errors in it. So you've got to, check their party. I see very much that you can't sort of leverage out running the entire deal. I'm responsible for the deal, and these people are part of my team, and I still need to check them and make sure that what they're doing is right.
I think this is it. So to become a long-term successful property investor or developer, I think you have to have fundamental understanding of every stage of the process. So fine, have a solicitor, have professionals, trust them, let them do their thing, but you have to have a way of monitoring it.
Yeah,
and you have to
check and verify.
Yeah, check and trust but verify, and check and verify. I think some of these clauses in these contracts are only ever looked at. Someone dusts down the contract, a few years later, you say, did I agree to a break clause in the lease?
And they're convenient at the time to get whatever it is across the line, but then you've got to deal, because I'm a long-term investor and been around the block, I've had to deal with situations 5 years on, 10 years on that, I found myself in slightly marginal situations because of some clause or whatever, and I don't want to do that sort of thing anymore.
Yeah, no.
I want to be sure that I've got a sustainable long-term situation.
Yeah, absolutely.
So
you need to kind of keep a close eye on everything. Yeah, which in a way kind of flies in the face of leverage, but one doesn't. They're not mutually exclusive, are they?
I
have leverage.
I have a little bit of a rant around leverage and abdication, because I think some people confuse abdication for leverage. So when you're leveraging, you're obviously moving to do something else, but you still need to keep tabs on what's going on, if that's through metrics or meetings or however you're doing that. But I've done this, so I don't do it anymore. But I've learned the lesson where I've abdicated, thinking because someone's being paid well or got sort of the right CV, that I can leave them to it, and that's abdication. So leverage, don't abdicate.
Okay. So we've talked a bit about you being a property investor for 20 years. And
Makes me feel old.
You've seen, well, you've got the experience, Fiona, that a lot of people watching this video will kind of, a lot of the people watching this video probably haven't been in property for 20 years. Some will have, of course. But maybe for those who have recently got into property, or maybe have been in property for a long time, but have never scaled up their portfolio, what sort of advice would you give people if you were starting again today? What sort of things would you?
Wow, I do get asked a lot about what would I do if I was starting again, and I have to put some brain power around to really come up with a kind of clever answer to that question, because some people say, well, it's easy for you. 20 years ago, there were a lot of strategies that you could use that you can't use now, cash back on completion and stuff like that. But then again, back then, we didn't have the hundreds of different financial instruments that we have these days. The access to money, there's more money sloshing about than there was back in my day. So there's in social media and technology is so much easier now to be a landlord. Apps and things like that we didn't have when I was growing my portfolio. So in some respects, it is easier today. More knowledge sharing goes on than back when I started. I was having to try and figure it out by reading American books and trying to figure out how I could make those strategies work in the UK, stuff like that. But if I was starting again, I think I'd pay more attention to making a proper plan. I just kind of put one foot in front of the other, but I didn't even know which mountain I was trying to climb. I was just doing it, and I was very much in the here and now, not really understanding, right, I want to generate 20k net cash flow within 18 months. This is how I'm going to do it. This is the working capital I have access to. You're putting a proper structured plan in place. I was just kind of going for it and very reactionary. And I would probably do more networking and training than I did as well, trying to find, especially there's more training going back to the difference between back then and now. There's loads more training out there. And I would probably be very proactive in, training and learning from the right people, joining masterminds and all that kind of stuff. And recognizing that I'm running a business. So I see property very much as my stock or my product, but I'm running and growing a business. So I put so much emphasis now on networking with business people and doing training and workshops and all that sort of stuff around business rather than just property strategy, because I have my property strategies already. If you don't have your property strategy, obviously you need to focus on that first of all. And but then also focusing on property as a business. I think there's a big gap in the market at the moment. recognizing big mindset gap as well. People understanding that they're running and scaling a business. It's all right if you want to buy 5 single lets and retire, great, then you could probably get away with it. But if you want to scale to £50 million, £10 million, £50 million, £100 million, you've got to put the work into the business side.
Otherwise, as it scales, things start to crumble.
They do.
And it kind of doesn't sustain itself at the higher level, whereas you're probably getting away with all sorts of issues and mistakes and hidden things that were not visible until you started really ramping it up.
And that's the non-sexy stuff, that they don't tell you about on courses. The stuff like working out whether the VAT return's been paid properly, or, what's going on with the pension scheme or things like that. And sure, you can bring in people to help you with that, but you still got to have a good understanding. Ignorance is no excuse. You've still got to have a working understanding on their outputs or what they're achieving, these people that you bring into the business to do that. And when you're early stage, you don't have the cash or the money or the cash flow because you're trying to reinvest that into growth or pay the bills.
Yeah.
So you've got to do it yourself.
Absolutely. But without working knowledge in any business, I think people can pull the wool over your eyes.
Yeah.
Suppliers, staff.
Yep.
You can have issues if you don't know how to do their job and you haven't systemized it as a business.
Or if they go and you're landed with having to do it and you haven't got a process procedure in place for that work.
Absolutely. So in your 20 years, you've kind of seen a lot, but also you're seeing new people all the time, like I am, at networking events and places you go. And this is quite dangerous now. We could go off on a bit of a rant here. This could be quite dangerous. So if the broadcast just cuts out, then probably you've said too much. They've pulled the plug. But I was going to say to you, maybe we could have a chat about the kind of rookie or beginner mistakes that we see that we kind of wish we could sort of say to people, this is something you need to look at a bit more closely. So maybe I could start us off. So I think you've already mentioned sort of not having a long-term goal.
Yep. Or strategic plan and blueprint, and knowing exactly what it is you are trying to do over a decade or 2 decades or whatever.
Yeah, absolutely. Do you think that people don't really... this is very this is a not sexy conversation, and some people will kind of switch off at this, but people don't seem to plan. People are behaving in some areas and some groups that as if the recession's never going to come back, as if we're never going to have a property crash, we're never going to have values fall, and we're never going to have lending restricted. Because at the moment it's like money's everywhere. Yeah, it is. And you've traded through a recession. Yeah. I've traded through a recession. I'm not willing one back anytime now. In the sense of remembering how hard it was, but I think there's a lot of people who haven't traded through a recession. I worry a little bit about the strategy and the long-term plan. Is that something you see as well? Yeah, I often say, I get asked this sometimes, I used to run a PPN for 3 years, and I obviously speak occasionally at networking events, and people will say, how do I get ready, or, do I protect myself? And we often discuss that. But I always think, but a lot of those answers you should be doing anyway. You should be managing your cash flow carefully. You should be structured in the right entity so that you're maximising your tax advantages. You should be keeping cash reserves in place so that, a bad month doesn't do you in. You should be obviously making sure your debt service is at the right level, keeping an eye on it. And, operating so that you're lean and mean, so to speak. All of those things should be part of your normal protocol or behaviours, not just because you think a recession is coming. Yeah. I'm working a 20-year, 30-year plan, and I'll be sharing that plan Wednesday night at PPN Canary Wharf. But so I'm quite a long-term thinker, and I want to be still standing. Obviously, if the tide, if the tsunami comes washing in. So it's not very sexy, but that sort of risk management protocol I'm following should really be standard anyway, not just because you're worried about a recession coming. It should be how you operate. I guess what we're saying is there's kind of two. There's one is kind of proceeding, throwing caution to the wind and just doing whatever and pretending it's not going to happen. But the other side of it is being so afraid of the recession that you do nothing at all. Middle ground. Yeah. So you're not afraid of the recession. You're not stopping yourself from growing, but you're just growing in a way that you've always got kind of one eye on. If something changes, I guess stress testing your model as well. And, keeping an eye on the macro influences on the market, what's going on to, things like Brexit and Clause 24, and thinking, like, one of the things is I know that the Cambridge market's softening because of sort of the data that I'm hearing on the grounds. A friend that was trying to sell a property got gazundered twice during that sale process.
and keeping an ear to the ground. But like you said, not being frozen in the headlights and then refusing to do anything.
Because otherwise, nothing will. I think somebody said if you don't risk anything, you risk everything.
Yeah,
So,
who said that?
I don't know. Somebody, I don't know. Let us know if you know who that is that said that. But I think.
But do you have to risk though? I mean, really, I don't feel in my 20 years I've put anything much at risk. I've always been, maybe I've been a bit cautious, and obviously I've grown organically, but I've always been. And then maybe being entrepreneurial, I don't see them as risks that I've taken, but probably an outsider.
Is probably at a different level. So, I mean, you bought a business. You bought a business that was a bar, that is a bar, I should say, because you really wanted the building. So a lot of people, and you weren't in the bar business, were you?
No, in fact, I had no background in the bar business.
Right. So if I'm looking at that from the outside, I would say, look, that there's inherent risk of, the bar staff could pull, all over your eyes. You might not know the business. But actually, you had done your figures, you'd looked into it, done your research, and you perceived that to be a low-risk investment.
Yeah, well, one of the key things with that in the deal analysis was that I knew that what I was paying for the building was above, what I was paying for the whole package, the building and the business, was, I had it in the bricks and mortar. So essentially, I got the business for free. So I knew that I could make that work somehow. And I also was at a stage in my business where the cash flow my business threw off was enough that even if the bar didn't trade, I could cover the servicing costs of the debt. So, I managed the downside risk by analysing it and making sure, I could deal with any problems that might have arisen.
That's really interesting. So, in terms of people who go into strategies like service accommodation, HMOs, do you think that there's a full understanding of the kind of business they're in?
Yeah, I mean, I've been doing serviced accommodation. I used to call it holiday lets. Since 2003, I've got. I had 2 in America, and I had up to 25 units in the UK. I exited that last year. Still have 1 unit in Florida, which I'm trying to move over to a single let at the moment. I sold a house in Florida last year as well, 4-bed detached house in St. Pete's Beach. It really was really, a really successful holiday let. And but I've exited that. Well, that's a hospitality business. As long as you know what you're getting into in these sorts of businesses, that's fine. But I do worry that people get, the bright lights of the strong cash flow, not realising the nature of the business that they're in. Yeah, so as long as you're realistic about what you're doing.
As long as the model works when you scale it up, as long as you understand that it can be full on, then you haven't got an issue with that in particular. It's just sometimes you can end up with 40 or 50 of these units or a whole block and actually realise, I'm in the hospitality business now.
Well, I know somebody that I was working with last year, and her long-term goal was a hands-free passive income lifestyle, and she was in service accommodation. Right. And I did query that, and she said that she understood that and she was going to change over time. I think she was working on a 10-year plan. The other thing is, to be a little bit disruptive, is I've started to understand that certain higher level strategies actually return the equivalent of service accommodation for, without that kind of work. I find that in commercial investment now, that I think with the right positioning, I can get sometimes an equal return without having to do any of that kind of work. Yeah. I'll share a couple of those case studies on Wednesday night at PPN Canary Wharf.
That would be really good. What I like about a couple of things you said earlier as well, and maybe before we were recording, is when you have a commercial building and you have a really good tenant, and they're on a fully repairing and insuring lease, it's kind of more hands off even than a single let, because they're doing the maintenance as well. Yeah. And I think that a lot of people who maybe dismiss commercial buildings or look at them only for development.
Yeah, exactly. Commercial investment's a strong, growing. It's the next thing. I think. Really? I think it's I felt a lot in my career, sometimes accidental, not by any clever design. I was doing first mover strategies that then became popular, and I do advocate as well as trying to look at what the next thing is, because there's an investor herd out there, and they're all doing their thing, which is great and fantastic. But if you can be operating in the fringe and think, right, well, they're all doing this, HMO, serviced accommodation, rent to rent. What's the next strategies then? I want first mover advantage. Can you imagine being one of those commercial to resi developers 3 years before, it was out there in the investor world, and people started doing it, and the price of the buildings went up, and having that first mover advantage.
You would have done a few deals before everybody cottoned on, before all the agents knew, before everybody was talking about it on the street.
Yeah,
you'd have kind of done a few deals and made the early money and probably big gains. So that's really interesting. Fiona, we're probably going to be running short on time now. So what I would just say is perhaps you could just tell us briefly, kind of whet our appetite for the sort of things. You've mentioned already you'll be speaking at PPN Canary Wharf on Wednesday the 11th of April. What sort of things can people expect when they come to see you speak?
Well, I'm really looking forward to coming to speak because I know, I see that it's one of the London's great networking events, and it's always busy and popular. So I'm really looking forward to coming Wednesday night. I'm going to be talking a little bit about where I am now and how I got there. So the strategies that I followed over the last 20 years, going through all those sorts. I think it was about 17 strategies that I followed. And I'm also going to be talking about where I'm going and what I'm doing with my property business and how I plan to scale even further with a more focused plan than I did over the past 20 years. That was a bit hit and miss and following this, something like that. So my focused plan for the growth, and specifically the growth drivers that I'm going to be using. I've recognised kind of 5 growth drivers in my business. So I'm going to be giving all those 5 in full detail, and hopefully people that come along will look at their own business if they've already got a property business going, an established business, or if they're a beginner, and how they can maybe map those drivers to their own businesses. It's a very, anyone that's ever seen me speak knows it will be a content-led talk. It will be all, I'm not holding anything back. It's all, I'm going to give as much as I can in the 60 minutes. I'm happy to answer questions. Then I'm going to do a couple of cool case studies of different deals that I've done that have been pretty interesting as well. So
I think, Fiona, genuinely, I know kind of I'm a bit biased because I'm running the event, but I've not seen you do a lot of speaking gigs recently.
No, I know, I don't speak that often.
Because I think you're too busy making money growing this massive property business, but I think that anyone who's seen you speak before would want to come along anyway.
It's a bit new. If you've heard me speak before, I have changed it slightly as well now.
Okay.
I'm going to be a new thing I'm sharing, which I haven't done before, is the metrics that I run my property company by. The core metrics that we look at every month. I'm going to share a list of those with everybody as well.
Wow.
So
that's pretty amazing.
Yeah.
So I'm really looking forward to it. Thank you very much for your time, Fiona.
No problem.
And look forward to seeing lots of you. Thank you already for booking your tickets. Seeing lots of you on the 11th of April.
Yeah, I don't speak very often, as you mentioned too. So if you can get along on Wednesday night, that would be great. I think it's going to be a really good night.
And we'll put the booking link somewhere in this post, down or up. Thank you, everyone.
Bye. Bye.